Alright guys, good morning and welcome to today live synthetic trading section. Alright, so today we are going to be analyzing the synthetic market. I'll be showing you basically how I trade and how you can also learn how to trade the synthetic market using my trading model. And today I'm going to be showing you everything step by step. And today, if today is your first time of coming across this channel or seeing my face, my name is Vetexx, and what I do on this channel every day is I show you how to trade the synthetic market, how to do your technical analysis, and what to look out for in the market. Alright, so on today's episode, I'm going to be showing you how you can do this same thing. So if you pay close attention and watch me closely, you are going to be learning a whole lot of things from this session. So what I'm going to be doing right now is share my screen with you so you can also see how I trade the market basically. So if you're excited about this, pay close attention as I'll proceed immediately. And then if you have any question at the course of my explanation, do well to ask your question in the comment section and I will also answer you. Okay, so let me share my screen with you right now because I'm going to be doing the analysis. Okay, it's basically 6 a.m. to 7 a.m. and today I think I'm a bit late, but that's not a problem. We are going to be doing what we can do and let's see how it goes. Okay, so let me share my screen right now and then let's get started. So first of all, we analyze about 14 pairs every day, and on those 14 pairs, excuse me, about 14 pairs every day, and then those 14 pairs, yeah, basically we analyze basically the synthetic market. Remember, I'm a synthetic trader, so I don't analyze the currency market at the moment. But as time goes on, all right, depending on the demand, okay, I'm going to be analyzing crypto markets, forex market, and the rest. But currently, right now, the only market we analyze the synthetic market. Another the synthetic market is basically the volatility indices and the step indices. So as time goes on, we add jump, boom, and crash, and that and that. Okay. So first of all, this is the trading model we use. Okay, there's every market has its own strategy, and strategy we use basically uh, is called the algo market structure, which is also known as the advanced market structure. Okay, and trading this model, we use what they call the continuation entries, right? We trade basically continuation. All right. Before we enter a trade, because most of the problem a lot of people have is knowing where a price is coming from and where it's going to. All right. That is where you need to understand the concept of top-down analysis. Okay. Knowing where the price is coming from and knowing where the price is going to and flowing along with the trend. Okay. So once you understand these two things, trading becomes more easy for you, right? It doesn't matter the type of system you're using, okay, provided you understand top down analysis, where the price is coming from, you understand the trend, you flow along with the trend, right? So right now I'm going to be showing you the trading model, what it look like and what you should always expect in the market. Okay, first of all, we have market giving you a, let's say you want to buy, the price will be giving you series of higher high, higher low, higher high, higher low. First of all, we have this. Okay, we have this high here. In the advanced market structure, we consider this as our sweep of liquidity. We consider this as liquidity, and this liquidity must be taken out because we have 5 rules that guide this trading model. Number one, there must be a sweep of liquidity. So this is the sweep of liquidity. This liquidity now has been swept out, and there must be a break of structure to the opposite direction, which is this. Okay, so this is the break of structure. This is the first sweep of liquidity. There must be a break of structure. After this liquidity is swept, there must be a break of structure to the opposite direction. All right. And after this, there must be a 50% retracement. Okay. And then there must be a second break of structure to the opposite direction. So price need to retrace back. Price will need to retrace back to give us structural liquidity. 50% retracement to give us structural liquidity. Now, this liquidity is used for continuation. Then, this first liquidity is used for correction. This is used for continuation. So, there must be another break of structure to the opposite direction. So, we have this second break of structure to the opposite direction. So this is break of structure one, this is break of structure two, and then this is rule number one. There must be a sweep of liquidity. Rule number two, there must be a break of structure to the opposite direction. We have this break of structure. Rule number three, there must be the 50% retracement. Rule number four, there must be a second break of structure to the opposite direction. That is where we get this. And rule number five, price will take out this newly created liquidity and continue to the opposite direction. So basically, price will tap into this, all right? Because after price tap into it, remember this liquidity has been taken out and it is used for what? This for continuation. So as price tap into it, it needs to continue to the opposite what direction. So this is what we have. So this is the rule that guides the advanced market structure, right? This is the rule that guides the advanced market structure. So these are the rules. This is what we look out for in the market every day. So first of all, we have our sweep of liquidity. We need to mark it down. Secondly, we have what? Our first break of structure to the opposite direction. Remember, price break structure to the opposite direction. Rule number three, we have what? 50% retracement to give us structural liquidity. And rule number four, we have our second break of structure. This becomes our protected high. And then this zone is what? Our point of interest. Okay? So this is what we look at for every day in the market. This is what we look at for every day in the what? In the market. So this is our point of interest. Okay, this is what we look at for every day in the market. So when you are doing your top down analysis, excuse me. So once you are doing your top down analysis, all right, this is what we look out for. You look out for this in the 5 minutes time, in the weekly time frame, on the daily time frame, on the 4 hour time frame. These are what we use to look. This is what we look out for in the market. Okay, the weekly, the 4 hour, the daily, and then the from the weekly time frame to the 24-hour time frame to the 4 hour time frame to the 1 hour time frame. We don't go below the 1 hour time frame doing our analysis for a better entry confirmation. All right. So this is what we have, and this is what we look at for every day in the market. Now, take for example, you understand that this. Let me take this out, and let me take this out. So this is what we have every time in the market. Okay. So take for example, all right, we have. Let's say we have a direction, because let's say this is a 4 hour time frame and then we are looking forward to take a trade. Okay, what we do now is once price tap into this point of interest, we wait for our continuation entry, which is going to be something like this. This is going to be something like this. So this is a continuation we trade every time, right? This is a continuation we trade every time. Okay, now we know that this is the direction, this is the 4 hour time frame. Okay, and then for us to look out for where to enter a trade there, look out for our continuation on the 1 hour time frame or the 30 minutes time frame. Okay, so let's take this out. This becomes what? Sweep of liquidity. This becomes what? Structural liquidity. This becomes protected high. This is our first break of structure. And then price tap into this point of interest. Let me take this one out. Tap into it. What happened? It sold off. sold off immediately. Right, so this is the full target. Right, so this is what we do every single time. Okay, this is what we do every single time. So on this time frame, all right, if you have a 4-hour time frame, you go to the 1 hour to look for your continuation. If you have a 24-hour time frame, you go to the 1 hour to look for your continuation. If you have a weekly time frame, you go to the 1 hour to look for your continuation. If you have a 1 hour, you go to the 1 hour for your continuation. So this is basically it. Okay. The same thing you look at from the higher time frame, you scale to the lower time frame, and then you find the same thing. Okay. This same thing happens on the 30 minutes time frame. If you have this structure on the 30 minutes time frame, if you go to the 15 minutes time frame to look for your continuation like this is it's also going to give you this. All right, it's also going to give you this. So this is how you trade the advanced market structure. First of all, you need to understand where the price is coming from and where the price is going to. Okay, understanding where the price is coming from and where the price is going to. On this 4-hour time frame, you can hold this trade to this direction. But for the best reasons known to you, you can always take your profits before price take this overall target, because there might be a reversal. Okay, but before you can take your profit, you will have seen at least 1 to 5, 1 to 6 risk to reward, and then you can then hold on to that. So this is the most important aspect of it, knowing where this price is coming from. Is it bearish, is it bullish? Then if a trade is bearish, you don't buy any, if you don't buy anymore. If the trend is bullish, you don't sell anymore. Okay, so stick to the trend until the target is taken out. Okay, so this is basically what you need to look out for. This is basically what you need to understand about the advanced market structure. First of all, there must be a sweep of liquidity. There must be two break of structure. Remember, this is liquidity one, liquidity two break of structure. Now, on this continuation, this becomes my sweep of liquidity. This becomes my break of structure. This becomes my structural liquidity, my protected high, and then I look for my confirmation entry in this zone, and then sold off. Okay. There was a trade I shared yesterday during the live analysis. Let's check it out, which is what V50 index. Let's see how it played out. So this happened on the 1 hour time frame, and then let me show you how the trade played out. Okay, I was unable to share it in the Telegram community, but regardless, uh, so first of all, this is what we had yesterday. We have our sweep of liquidity here. Those of you that were present and active, this trade gave up to 1 to 10 risk to reward. Okay, so if you were active yesterday, this was supposed to be a very good win for you if you were active here yesterday. All right, so we have this. So this is the structural liquidity that price gives us. Price gives us this. Okay. Now you see price take it out. So this is our sweep of liquidity. First sweep of liquidity, and then we have our second sweep of liquidity, which is here. Okay, so this is what price gave us yesterday. So yesterday, after price gave us this, okay, now this is our continuation. Now the first we have what this now becomes what our what sweep of liquidity here, and then we had this as our what structural liquidity, which was this. We had our structural liquidity, which was this. So price took it out, and then we had this as our protected high. Okay, so this becomes what our point of interest, and this was what our break of structure. And what did price do? Price tap into the zone and then sold off. This is it. Easy peasy. This is it. Our stop loss was somewhere around here. Yes. And then price sold off. Look at this work of art. So price sold off. Right. smashes our target. So if you were live here yesterday, you see me doing this analysis yesterday. Yesterday I was saying if price break this structure to the downside, we are going to have a beautiful sell. And lucky enough, not lucky enough, the price did exactly what we anticipated, and then it sold off. It sold off. This is beautiful. It sold off. Okay, this from year to year has already given 1 to 10 risk to reward. 1 to 5, 1 to 6, 1 to 6 here, 1 to 7, 8, 9. This is about 1 to 15. I mean, risk to reward. Risk to reward is crazy. It's crazy, man. So this is what we had yesterday on V50. On V50. Okay, we had this on V50 yesterday. So let's check the next pair we are going to be analyzing for today. Starting from the next pair, we have V10s. Let's check V10s. Let's see what V10s have. On the 24-hour time frame, we are bullish on V10s, bullish everywhere on V10s, but we haven't really gotten a direction. So let me check the 4-hour time frame. If you're going to see any continuation on the 4-hour time frame. So currently we don't have a continuation on the 4-hour time frame. So that is to say, V10s we don't have anything currently. Trend is bullish, so we can't be selling. All right, trend is bullish. We stick to the bullish trend. We cannot be selling at this point. All right, so let's check the next pair, which is step 200. What do you have on step 200? Is it buying? Is it selling? Okay, step 200 have this. Mm, I can't really see anything on step 200. We don't force setup. I can't really see anything on step 200 at the moment. So I think that we'll let that be. If I'm to look at this, okay, what do we have here? There's nothing on step 200 right now. I'm anticipating a 4-hour point of interest, which is here. Is it? Yeah, which is somewhere around here. But I've not seen it yet. So I don't have anything on step 200 at the moment. There was a sell here. I think we have something here. Now, there's nothing on step 200 at the moment. So let's check step 500. So today I'm just going to mark out continuation, mark out the continuation, and then we can just start uh, moving, moving. So yesterday we had a sell on step 500, but it took out our stop loss, which is we had. Uh, Remember, this is structural liquidity. This is the protected high. This is the so we had a sell on step 200 yesterday. We had this on step 200. So price gave us this. Price gave us this. Give us this. Weak us out a little bit. There was a sweep of liquidity from this angle. Okay. There was a sweep of liquidity from this angle. We have a sweep from here. Price come into the zone. If our stop loss was wide, price would have tagged us. Price wouldn't have taken us out. But our stop loss is not that big because we're using supply and demand. So I think price weak was out and then continued to its direction. So this is about this move alone is about 10 to 12 ways to reward already, but then we're not able to catch the trade because it got invalidated. But it's all good. Right now, we don't have any current setup on step 500. So let's check the next pair, which is what? V51S. V51S, starting from the, okay, starting from the 24-hour time frame, we have what? V51S. Okay, this is what we have on V51S. V51S is currently bullish, and then price is giving us what here? Let's go to the 4-hour time frame and see it clearly. We had a sweep of liquidity here. We have a protected low here. We have our first break of structure, which is here. We have what? Protected low, structural liquidity, which is here. And then we have what? Second break of what? Structure. And this is what? Our point of interest. So this is what? Our protected high, which is right here. Alright? Now, if you go to the 1-hour time frame to look for continuation, what are we seeing? On the 1-hour time frame, we have this continuation, but price didn't come back. This is it. Okay, so this is basically it. As price come to this zone, as it tanked down to this zone this way, as it tanked down to this zone this way, what did it give us? It gave us this, and then it went up. So we are anticipating price to come back, tap into the zone, and then move to the opposite direction. What did it do? It did not come back. Okay, so this is exactly what we had. This is exactly what we had. Let me take out this box. So we have this. We have a protected low here. We have this here. We have this, and then there's a sweep of liquidity from the other side. So this was our point of interest. We've been anticipating price to come down here and then tap us in and move to the opposite direction, but it didn't do that. It hasn't done that. So if you look at the 1-hour time frame, we have another. Let me go to the 30 minutes time frame. We have another continuation that is trying to form at this point. So this is what we have. We have a sweep of liquidity, right? And then we have what? Structural liquidity here. We have break of structure, and we have our second what? Break of structure. So this becomes what? Our protected low, and this is our what? Point of interest. All right, it's clear enough. Now what we're anticipating now is for price to come into this zone, come like this, right? Give us this, give us this, move to the opposite direction a little bit, tap into the point of interest again, and boom to the upside. Okay, so this is what we're anticipating. It will be like this. We're anticipating this. So this is what we're anticipating, right? So once price does this, then we can have a very beautiful buy to the upside. But if it doesn't, if price come into this point of interest and give confirmation, we are not going to enter until you give us this before we can then get it. This is the continuation confirmation. So definitely price is going to move, going to do its normal move, right? Going to come do this, do this, do this, do this, tap here like this, come. So this will become our point of interest. Let me take this out. This will become what? Point of interest. Alright, and then this will become our what? A new structural liquidity. This becomes our new low. Becomes what? Break of structure. Alright, and then this is where we buy from. This is where we buy from. To the what? To the opposite direction. Buy to the opposite direction. I believe this is clear enough, and it's very, very clear enough. So this is how you avoid unnecessary losses in the market. This is how you avoid unnecessary losses. So understand this concept, and then it will become more. It's because there's higher chance for you to, okay, price come into this zone, you just enter aggressively. You don't know if price is going to give you a continuation confirmation that price is going to keep buying. Okay, because price might come here, dance around, and then price might come to this zone, just come down like this, give you confirmation, dance around, and boom to the downside. But if you waited for this, all right, you wouldn't have experienced that disappointment. But it's all good. This is the best way. This is the best approach you need to use. All right. So this is how you treat this. So now let's do the next pair, which is on V75 1S. What do we have on V75 1S? What do we have on V75 1S? Okay, V75 1S currently analyzing the market from the 24-hour time frame. V25 1S is bearish. Okay, it's bearish. Give us a move here. There was a first move price gave us a oops. Okay, something here is here. You didn't respect it. Go to the 1 hour time frame. Something I want to check. So we had a sweep here. This okay. This was the 1 hour continuation we had earlier on this V75 1S. Okay, we have this. Okay, this is good, good. Okay, wow. So starting from the 24-hour time frame, V75 1S is bearish, right? It's bearish. So we have a sweep of liquidity which is here. How about a break of structure? A protected high, right? It's our point of interest. So this is break number one. This is break number two. Okay. So this is what we had on V50 on V75 1S earlier. Alright, and price started moving from this point, starting point, and the finish point is below here. So this was our starting point, and this is the finish point. Now that we know where price is coming from, what do we do? Go to the 1 hour time frame and look for continuation. If you see, we are going to start taking it. But if it doesn't see anything, let me go to the 4 hour time frame first. Check. I think I saw something beautiful. Okay. All right. So now this is what we have on V75 1S. This is what we have on V75 1S. We have this sweep of liquidity. This is our protected high. Structural liquidity, sorry. And then this is what protected high. Okay. This is a break. If I take it out, of course it was taken out. And then this is another. So this is our point of interest. So you're anticipating price to come into this zone, give us our continuation confirmation, then we can then sell to the downside. So price tap into this zone to give us this, then we can sell. Alright, so we use it as our structural sweep of liquidity. Use it as our sweep of liquidity. Price make it like this, then we can then sell to the downside. So this is what we're anticipating on B75 1S. What's the next pair? We check B25 1S. Let's see what it has for us. B25 1S on the is bullish on the 24-hour time frame, and then also bullish on the 1 hour time frame. So starting from the 1 hour time frame, let me show you where the price is coming from on the 4 hour time frame of V25 1S, so you know what to look out for. First of all, we have this sweep of liquidity, which is right here, hidden inside here. Secondly, we have what structural liquidity here. Then we have what protected low. This is our what first break of structure. Excuse me. This is our what first break of structure. This is our second break of structure. And this will become what point of interest. Alright. Now what is the next point of action for us today? On this place, if you come to the 1 hour time frame, we had this earlier that played out, but we didn't catch this trend. I don't know what's happened. Okay, I think I was not really active on the chart. So we had this price give us this sweep, give us this structural liquidity, and price tap into it. I marked it down for a very long time. Price tap into it, and what did it do? It bought to the opposite, bought to the opposite direction immediately. No coming back, no wasting of time. It bought immediately. So it tanked. Alright, now this is what we had on it. Price keep tanking. Okay, so we had this, it's still at this point, and this is the direction. So imagine I've headed straight from this zone, to this point here. That's crazy. Even at this point already, this is almost, what is the risk to reward here? These are 1 to 28, 1 to 28 risk to reward. And then what is my risk? That means if I'm risking like $1,000 on this trade, right? If I'm risking like $1,000 on this trade, I would have made $28,000 easy, right? So let's say my full take profit level was around this first high. How much would I have made? If I'm risking like $1,000, I would have made $14,000. So if I'm risking $2,000 now, I would have made 2,000 times 14. I would have made $28,000. Risking $2,000 already. So if I'm risking $2,000 here, I would have made nothing less than $56,000. Okay, so this is it. So this is what we had on V25 1S. So let me just go to the 1 hour time frame and see if you are going to see continuation. So on this 1 hour time frame, currently there's nothing happening, and for that reason, we will pass. Okay, so now let's check the next pair on our list, which is V51S. What do we have on V51S? V51S smashed, just took off, not quite long. So we had this on V51S. We have what? A sweep of liquidity. At a sweep of liquidity, we have a protected high. We have what? Structural liquidity. And we have a point of interest, which is here. Alright. So this is our first break of structure. Excuse me. We have this as our first break of structure. Second break of what? Structure. So price came to the 1 hour time frame. Give us a 1 hour continuation around this point. Okay, you can see it clearly. We have this sweep of liquidity. We have, let me take this out. Have this sweep of liquidity. We have this structural liquidity here. We have what? A protected high right here on the 1 hour time frame. And then we have our break of structure hidden inside here. And then price what did price do? Price tap into the point of, so this becomes our what? Point of interest. So price tap into this point of interest and continue to move to the opposite direction. This was, what is the risk to reward here? This was already 1 to 20 risks to reward. Okay, so this is what price did. After coming to this point of interest, it gives us a continuation confirmation for a what? For a sell. And what did it do after? It sold off, sold off, sold off, sold off. So price is currently at this point. I don't know what it's up to. Maybe it's trying to come to this 4 hour zone, but that is none of my business anymore. We've already made the money we want to make from this trade. Okay, so we'll check the next pair, which is what? V100. What do we have on V100? What is happening on V100? It's been a minute. Okay, so this is what we have on V100. Is V100 trying to give us something? Do we have anything on V100? Very, very interesting. So price is trying to sell from here. We have this. V100 bearish or bullish? Let me check. This is up to 50%. Let me check out. Let me check this zone. If we have something that, if something happen at this zone, let me check. So we don't have any clear setup here. So let me just pass. What do you have here? Anticipating this price to take out this high bar. It didn't do that. Price didn't do that. What else do we have? Nothing is currently happening on V100. Just tanking, tanking, and tanking. So let's check the next pair. What do we have? I'm anticipating this move. There's no important sell on V100 at the moment. So let's check step 300. Price hasn't gotten to our point of interest. Let's check the next pair, which is what? V100S. V100S is bullish. What do you have? Got nothing. Got nothing on this. Nothing, nothing, nothing. Let's check the next pair. Step 100. What do you have on step 100? Okay, okay. I can see something on step 100. So we're waiting for this sales up on step 100. First of all, what do we have? We have a sweep of liquidity. Now, this is why you need to join the Telegram community, because the more people I see there, the more setup I'm posting. Okay, so you if you are on this live analysis yesterday, you wouldn't have missed the V51S sale. Right? I would have given you a 1 to 10 risk to reward. Easy. Imagine risking $50 on that trade. You would have make easy $500 from that trade. And that can even sustain you for a very long time. And that's crazy. So two of those kind of trade in a week, you are set. So this is what we have on V100 index. It's a 100 index. So I'm going to save it. Alright, so I'll save it for the future. So this is what we're anticipating. I'm anticipating price to come into this zone. Alright, give me this. Come back here, and then I'll sell to the downside. So this is what I'm anticipating, because I'm bearish on V100 on step 100. I'm very, very bearish on step 100. So this is what I'm anticipating. So price will come, give me this, and I'll sell. It was a beautiful sell with me, say. It's a beautiful sell, the most beautiful sell ever. Miss it here. And then here is another one. Let's say here is another one. We have another one here. We have another one. Another one here. Once the trade starts tracing you, you don't need to waste your time on it. Okay, so we have another one here. Did something happen here? I think so. Okay, we have a sweep here. But the trade and a mix here is serious. We have a sweep here. Come on. Are you kidding me? Let me go to a 5 minutes time frame. Let me check this here. Because how did I mix it? So currently, this is what we have on step 100. So you can just save it and be on the lookout. They have this on step 100. So this is exactly what I'm anticipating. So this is clear enough, right? You can save this and then be on the lookout for it. Next pair I'll be checking is V25. V25, what do we have on V25? V25 look like V25 is bearish. So this is all me I have on V25. Okay, I have a sweep here, right? I have a protected high right here. This is my sweep of liquidity. First break of structure, second break of structure. Then point of interest. So what are we anticipating now? Putting price to come in. Give me this. Give me that. Give me this. Tap into this point of interest and sell to the opposite direction. So this is all anticipating on this pair right now, right? So I hope you thought this, then we can sell. So you can also save this. So right now we have step 100 and this V25. So let's check if this is up to 50% retracement. Okay, of course it is. So we save this. And the next pair we'll be checking is next V90. V90, yes. What do we have on V90s? We also have a buy on a sell on V90s. This is crazy. We have a sell on V90s. So let's be on the lookout for this. Let me mark it. We have a sweep of liquidity. V90s is bearish. We have a sweep of liquidity. We have this. We have protected high. Alright. And then this is our first break. Second break. Alright, so this becomes what? Our point of interest. So one price tap into this zone, we'll look at for our continuation confirmation for a sell before we can get in. So this is I'm going to save this. Alright. So what is the next pair? V30s. Let's check V30s. V30s is bullish on the 24-hour time frame already. Right? It's bearish on the 24-hour time frame. Look at it. See the sell. So let's check the 1 hour time frame and see where price is coming from, where price is trying to go to. So I had this sell yesterday. Okay, this is it. I had it yesterday. So there was a sweep of liquidity here. Alright, there was a sweep of liquidity here. Price has already tapped into the zone and it's trying to start moving. There was actually a sell yesterday. Price played out yesterday on this pair. Okay, I'm going to show you right now. Let me mark this at first, then I'll show you something. Immediately I came to the chart, I just spot it. Okay, so there was this. So first of all, before that, okay, remember now, if you go to the look, starting from the 1 hour time frame, you can already see that we are going to start anticipating a sell. Okay, we have this already. We have this already. We have this. We have this now, and we have this already. The next thing now is for price to break this out, and then come into this zone, tap into our PUI, and then sell off. So this is what we're anticipating on V31s right now. Right, this is what we're anticipating on V31s right now, because it's already giving us a sweep, protected high, structural liquidity. The next thing is we are waiting for a break of structure to the opposite direction, and then price tap into our point of interest and then sell off. So this is what we're anticipating on VTTS right now. So, but there was a continuation it gave yesterday that played out. Let me go to the 5 minutes time frame and show you. And as small as the continuation is, it would have given you at least 1 to 2 raise to reward or 1 to 3 raise to reward. That's crazy. So we had our sweep of liquidity here. You can consider this as our sweep of liquidity since it is high. And then this becomes what? A break of structure. Look at it. Look at this. This becomes what? A break of structure. Is structural liquidity, sorry. And then this becomes our first break. Okay, this becomes our point of interest. And price did what? Price sold off. Price sold off from here. Okay, price sold off from here. Came down here. So this actually gave up to 1 to 4 to 5. This gave like 1 to 5 risk to reward before it retraced back to the opposite direction. So this is what price did yesterday. Now this is what we are anticipating now on this pair. Alright, so we are waiting for a break of structure. This now becomes a structural liquidity. Structural liquidity. We are waiting for a break of structure. This, alright, we're waiting for a break of structure. Now, once price break this structure, tap into the zone. We are anticipating a sell to the downside. So this is what we are anticipating on this pair right now, because it's already selling. Alright, it's already selling from here. It's already selling. Okay, so hopefully price give us this, and then we have something to hold on to. We have something to sell. Right. So this is what we are anticipating on VTTS, the 1 hour time frame. So all you have to do now is be on the lookout. Just be on the lookout. Okay, so I'm going to save these two. Alright, so the next pair we are going to be checking out is what? V75. V75 on the 24-hour time frame, it has been bullish. Sorry, it has been bearish. Alright, it has been very, very bearish. And then on the 4-hour time frame, what is it doing? It's still bearish, but now we have something to work with. Do we have something happen on this between the 12 and I was not aware. Let me check something real quick. Okay, nothing happened. So okay, good. So right now the 1 hour time frame of V75 1s, we have this. We have this. The sweep. Alright. Structural liquidity. Protected high. Break of structure 1. Break of structure 2. So we're anticipating price to come into this zone, give us this, and then sell to the downside. So this is what we're anticipating on what? On V75 and the 1 hour time frame. So we're anticipating this. So the next pair now Last but not the least is step 400. What do you have at step 400? Starting from the 24-hour time frame, step 400 is bearish. We're trying to buy to the upside right now. I don't know. Yes, that's what it's trying to do. And then nothing on the 24-hour time frame, nothing on the 4-hour time frame. So we don't have anything on step 400. So our the price, the pair we are looking at for currently, number one is V31S. Okay, V31S. You're anticipating this move on V31S. Number two is V91S. So you'll be on the lookout for V91S. So this is it. The 1 hour time frame. You're anticipating this V91S. Alright. The third one is V25. Anticipating a sell on V25 too, because it's bearish. V25. The fourth one is step 100. Step 100. Okay, step 100. This is what we have on step. We're anticipating on step 100. So we have this four setup we're anticipating. Right. First of all, we have V30S, V90S, V25, and then uh and then V sorry V30S, V90S, V25, and step 100. So those are the pair we are anticipating a move currently. So if you have any question, you can drop it in the comment section while I go through it. So I'm going to wait until our time is up, then we'll call it a day. Alright, call it a day, call it a day. So let me show you some of those trades that played out that we were not able to, that we missed them some while ago. There was a sell on step 100 here that you're supposed to catch, but we didn't. So if you're actually confused about this, the advanced market structure and the likes, okay, you can always watch the video, my previous live, and then always check my watch list, my playlist. There's a lot of videos there that you can always help yourself with it. You can always go back to it and help yourself with it. Okay, so that is everything we have. And then once your rules of the advanced market structure is complete, you can always have a good way. So using the higher time frame to trade is actually going to give you more clarity. You don't contemplate on the lower time frame sales, just like the 5 minutes and the 15 minutes, and you can always do a very good risk to reward. Like a day before yesterday, there was a sell on V51S. I did up to 1 to 10 risk to reward. There was another sell on V51S. V51S I did up to 1 to 10. V25 1S up to 1 to 10. And V50 yesterday I did up to, was it not 1 to 10? Yes. And that is it. So if you can be catching that type of trade like 2 every week, that is like 8 in a month. Alright, 2 every week, that's like 8 in a month. That is a whole lot. Okay, so with your $100, you can actually take it to something like $1,000 within a month, and that is a whole lot of money, to be very honest. I pray with consistency, God will help all of us, because we are all trading for the money, and you know how things go. So basically, if you put your mind to it, because trading is not really easy. So if you put your mind to it, you are definitely going to do everything better to better yourself. So that is it. So as time goes on, the more you learn, the more you document what you are learning. You journal your losses, you journal your win, the reasons for all of those things. You start getting better on it. Okay, because one thing with this psychology stuff, you don't overcome it immediately. It takes time and effort and dedication for you to get to that point. All right, so we've come to the end of our class today. I'll see you tomorrow, same time, same place, 6 a.m. to 7 a.m. And do have a nice day. Make sure you trade responsibly. If you have any question, if you haven't joined our Telegram community, the link to join is in the description of this video. Join, and if you are new to synthetic indices, you want to register, you want to start taking the same trade with me, you can use the link for Deriv broker. Sign up, fund your account, deposit, and let's trade together. And don't forget to join the Telegram community. If this is your first time of watching this video, or if you are watching it on live replay, do well to subscribe to this channel, turn on the notification bell so that whenever I go live, you'll be the first to get notified. And I'll see you tomorrow. Do have a nice day. Bye.